Be joined by Impero, software as a service in the compliance industry, both by the CEO and CFO. Of course, you had an adjustment to 22. We were looking into 23 here, so I guess we will also cover that area, but I guess you will also cover the announcement yesterday on the adjustment of the guidance. But for now, I will hand the word over to you, Rikke.
Thank you very much, and thank you for the invitation. Together with me, I've got Morten, our CFO, and I'm Rikke, the CEO of Impero. And we're very pleased to give this presentation on our journey, telling you a little bit about what we do, who we do it for and with, and where we're heading. Before we dive into too many details, we will also touch upon, as you just mentioned, Michael, our adjusted guidance that we sent out yesterday. So if we could maybe see the slides, please. Otherwise, I'll just start out by giving a brief introduction to Impero. I see something where it just says Morten. And
maybe it's because we're in presentation mode.
The slides are up, so we will tell you which slide it is. I don't know whether you can see them.
Sorry, Michael.
Yeah, no problem.
Super fast. We will just tell you a little bit about Impero. We were founded back in late 2013 by two ex-Deloitte consultants who had seen a need with their customers to help them manage all their internal control activities. So that was where it all started back in late 2013. They developed the first internal controls platform with 3 customers, and we have, of course, expanded that pretty much since back then. We listed on Nasdaq First North in April 21, and we're happy to tell you a little bit about the progress that we're seeing here. What we do is that we actually help increase trust and transparency. We help customers manage their inherent desire to either become or stay compliant. And we do that via a business-to-business software as a service platform that I will tell you a little bit more about in a moment. Last but not least, our current focus is on Northwestern Europe. We see a high need for compliance in these areas, or it's driven by the market where compliance is a thing. But there are so many more opportunities, and we will also tell you a little bit more about the market opportunities outside of Northwestern Europe as we move forward. But first, if you could maybe give us a slide on the updated guidance for 2022.
It's on.
Thank you. We've seen a delay in the decision making, and we've also reported on this earlier on, but we have been confident that we could make it within the original guidance range. Very lately, as in yesterday, we've seen a few large deals move into next year, meaning that we don't see it realistic to actually get within the former range. So we've come up with a new range for ARR, and to be totally transparent, we've told where are we right now. We are at 23.3 million Danish kroner in ARR. So anything from there we will add, and we see that there's an opportunity to go up to approximately 25 million Danish kroner within the next few weeks. At the same time, we've also adjusted our EBITDA guidance. We were telling in the Q3 report that we were pretty cautious while spending our money, and we also did an adjustment to the organization to make sure that we had enough gas to run the Impero vehicle forward. And we come out with an adjustment to the EBITDA guidance going earlier on from -20 to -18 million Danish kroner, and now it's -18 to -17 million Danish kroner. That was, of course, extremely unfortunate for us to have to come out with this message. But that being said, when we knew it, we came to the market, we told the story. And now we're just here to try and close the year in the best possible way, and then to move forward into 2023. I'm pretty sure that we're going to have a few questions to this when we get to the end of the presentation. So let's move forward from here. The Impero platform, just to give you a brief idea of what it is we do. We help companies identify, document, and mitigate their risks. So whether it's operational risks, it's strategic risks, process risks, etc., you have the opportunity to, on a global level or company level, as well as local level, to work with your risk management in Impero. You also have the opportunity to do all the mitigating actions, and then of course also to report and document that you've done it. As they say in the world of internal controls, if it isn't documented, it's not done. So we work with the companies on automating the recurring processes and controls that they have in their organizations, making sure that they have really strong reporting on what they're doing, and also that it's documented so that they can be audited. This goes for tax, finance, ESG, other areas where you have auditors coming in, looking at your internal control setup to create confidence that you're actually doing the things that you say you will do or that you say you do. So that's a very short version of the Impero platform. It's super easy to use, and actually many of our users, they don't even know they're in a new platform, but also for the administrators, it's really easy. It's very scalable across compliance domains, across geographies. So we often see that we start small. It could be within a limited compliance domain, or it could be within a limited geography. And then we see the use of Impero growing, and we call that our land and expand strategy, and I'll come back to that briefly. It's very easy for the companies to adopt, and it's becoming increasingly interoperable. So we see Impero as a kind of a piece in a puzzle of a bigger compliance ecosystem where we have data coming in from ERP systems. We do control based on data analysis, and we also make sure that we integrate with reporting tools so that it's really easy for the companies to provide the right reporting for their board of directors, audit committees, management teams, etc. Moving ahead to our customers and who they are, that's often pretty large companies. So we see companies here like the Volkswagen Group or Siemens, Maersk, etc. It's also smaller companies. It's across different industries. It's across many geographies where we see this need for supporting your compliance activities. We work with partners, and those are often big four companies like Deloitte, KPMG, PwC, etc. But recently also, as announced earlier on, Massage in Germany, where we're working with them to be even more present in the mid-market in Germany. And fortunately, we have seen some good results also from that latter partnership. Looking at the market we're targeting, well, we're currently primarily in Northwestern Europe. We do have customers elsewhere, but that's more like 5 or so in the US and a bit here and there. So we're primarily focusing on tax and finance in Northwestern Europe. It's really important for us to work in countries where compliance is important. So that would often be the companies that you would see scoring pretty high at the anti-corruption or anti-bribery indexes. Northwestern Europe is a good example of that. So is, if we look a little bit into the future, countries like North America, Singapore, Australia, and Japan. Also, we're primarily working with companies that has a certain degree of complexity, and that can be even smaller companies working in highly regulated industries, such as the financial industry, or the insurance industry, for instance, or it's larger companies like the Volkswagen Group, where they need to have a global setup to manage all the risks related to their tax environment. That is a pretty large setup, to be honest. And these different types of customers in the geographies where they value compliance are the ones that we most often work with, and that we're targeting also going forward. What we see is a fast-growing market, so the numbers say approximately 13% year over year, and I believe that we've all experienced that compliance is here to stay, and we will most likely see it increase even further going forward. And that is the market that we are actually targeting as we go forward. A quick word on our land and expand strategies before we move into the numbers. We have 3 pillars that we use as our sales channels. So one is our collaboration partners, and those, as I already mentioned, are often the big 4 companies or the slightly smaller but still in the big 10 global auditing firms. And we use them as kind of a blue stamp going into a new market. We have them target the first customers, and fortunately, they keep on working with us. They see that they get some large projects, they get an opportunity to stand out from competition because they come to the market with a cost-efficient and really easy to use, really scalable tool that the companies can use in many other areas than just within that specific first project that the partner might actually be talking to. They give us an access to the market, and they also come with the knowledge about the local as well as global compliance requirements that we couldn't necessarily be on top of across different markets. Along with that, we also have our direct sales. And here we've invested heavily in marketing over the past year, and we've built a team, and we can now see the fruit from those investments in terms of being able to generate leads that we can work on with our own sales team. That's a really interesting channel for us too going forward. And as we also see on the numbers here, it actually brings in quite a lot of the revenue. So these are the historical numbers looking back, saying, okay, where does the revenue come from? And you see 38% from the partner channel and the rest from our direct channels. The last pillar here is the uplift channel, which is driven by our customer success team, and that's all around the expansion. We see our customers expand the use of Impero into new domains, new geographies, as already mentioned, and we work with them closely to support them in bringing Impero into relevance in more areas. By the end of Q3, we saw an uplift of 17%. And as we also maintain, also due to, of course, an excellent platform, but also great work from our colleagues, a low churn of approximately 4%, we see a net revenue retention rate of 113 by the end of the third quarter this year. So that was a quick glance at the sales channels, the market we're heading in, and the customers and partners we're working with, as well as the platform itself. And with those words, I'll leave it to you, Morten, to give us a bit of insights on the SaaS metrics.
Thank you, Rikke. And with the risk of repeating a bit of what Rikke just said, then we here show our SaaS metrics. We have, by end Q3, delivered 39% ARR growth. And we do that with selling to our customers. We see that comparing to 12 months ago, we have managed to increase the average revenue per customer from 148,000 to 165,000. So a really nice development. And it's not just because we're bringing larger customers on board. No, it's also due to the fact that our existing customers are buying more from Impero or adding additional users. We see that with the uplift, where we're seeing existing customers buying 17% more than they did a year ago, and on the rolling 12 months basis, as well as keeping a low churn over the 12 months period, which gives us the net revenue retention that Rikke also just talked to. Looking at the channel split, we here show it for Q3. So what we have managed is actually there's almost a 50-50 split between the new revenue coming from partners and coming from our own channel. That's also what we have seen throughout the year, and we're pleased with that development. So we really appreciate working together with the partners. It's very important for us, but it's also important for us that we manage to be successful on generating the business ourselves, and that way also supporting some of the partners. With the market split, we can see that in Q3, it was primarily in other parts of the world besides our two main markets, Denmark and DACH. That's of course very positive to see that there's also activities outside of these regions. Some of it is though related to Greenland, but we've also a new customer in Singapore, which is very interesting to us. Going to the next slide, we see the waterfall here with where we started the year. Or where we started this 12 months period. We started with ARR of north of 15 million. We have had churn of 600,000 Danish kroner and have had uplift of 2.6 million. And on top of that, we have added customers for 4 million. If we look at the chart in the lower right corner, we can see that the growth, and we also see that Q4 is an important quarter to Impero. That's where we close a good part of the new ARR. We also do that this year, and as we referred to, or Rikke referred to before, with our updated guidance, then we're currently also at a level where we have closed already quite some business, and with the aim and expectations also to close more before we turn into 2023. And if we look at the financial figures, I won't talk a lot to that, but we see good development in our reported revenue. The way we do it is that we take, when we do a new sell, then we include 1/12 of that revenue on an ongoing basis. So the ARR that we close will over time turn into become revenue, but there is a delay due to the way that we recognize the revenue. We have a very nice gross profit. It's 96%. It's up quite a bit from last year, which is mainly due to re-invoicing an implementation project last year. So the 95 to 96% is the level where we would be and usually would be, and is also our aim going forward. Other external expenses and staff cost has grown these 40 to 46%, and in line with the development we have seen, and with the recent kind of a bit more cautious approach to our cost, we'll of course not see that significant growth going forward. But as I also mentioned, we are investing in our commercial vehicle with building a marketing team and also with focus on growing sales. As we are a growth company that will continue to grow. But of course, this is coming from the level where we got listed on Nasdaq First North in April last year. The last slide I have here before we go to the Q&A is just kind of stating that we completed the capital increase. We did a minor increase where we raised 7 million in a private placement here at the end of November. We were very pleased to see that both current and new investors had the confidence in the company to invest. And we have both an existing investors like Colin AS and Bank Invest joining us in this capital or this round of the private placement, but also a new investor like Claus Holse, and we also had a few people from the board investing, including the chairman. And of course, with this increase, we are in a very good position to continue to invest in accelerating our growth. And we have a strong position going into 2023, and with the securing the capital position for at least the next calendar year, but probably also longer than that. So that was the presentation.
The presentation. Great. Let's go through some questions. I guess one from my side, you are indicating it's a delaying. So do you expect to pick that business up in 23? And secondly, you had, and that was your last comment, the announcement that you are financed to to keep your growth plans in 23 with this capital raise? And is that still the case despite this, you might say, lower starting point for 23?
Let's start with the first part of your question and say it's completely right that we have seen these few deals being delayed, and we do, of course, work on picking those up, as does the customers, in the new year. We haven't guided, to come to you, the second part of your question, we haven't guided for 23, and we're not guiding yet for 23, as we also wrote yesterday. I think everybody has become a bit wiser during this year and see that there are some new trends out there about how do we maybe revise our investments, not on our side necessarily, but within the big companies where there are some geopolitical and macro themes that are not really within our control.
Yeah,
exactly. That of course we are with our board looking into exactly what are we going to say about next year, and as soon as we're ready with that, we will of course tell the market.
But that also kind of points to the importance of building a strong pipeline, which is also why we have invested a lot on the commercial side, and we're also seeing the benefits from that. So we believe we're in a good position. And as you're also indicating, Michael, none of the customers, we haven't cancelled, or the customers have not cancelled the dialogues. So we're still in a good position to be able to close these deals in 2023.
And there's a question here.
Part of your question.
Yeah, the second part. Yeah, let's take that.
Yes.
Yeah.
We do. There are no changes to the fact that we have sufficient cash to manage through 2023. So this adjustment to the guidance does not change anything to that.
Perfect. There's a question here. What differs on the German market? You touch upon it, macro, geopolitical, compared to last year, and how are the market conditions in other markets? Is it isolated to the DACH region, or is that also widespread that there is some postponement in the process?
I think it is wider spread, but looking at our focus today, we are mainly in the northwestern part of Europe, and much of our focus is currently on Denmark and on DACH. So that's really where, I mean, I shouldn't be the one who tells about huge global development in the industry, but let's just say that for Germany, I think Denmark, we were pretty fast on figuring out how we would go about energy supplies and stuff. And maybe with some of the customers that we have in Germany, a lot of them being industrial companies, they've had during COVID issues with their supply chain, getting the right stuff in place to actually build their cars or build whatever machines they are providing to paper industry or whatever. And at the same time, they have so many open ends on the energy supply. So there might be things that move up the ladder in terms of priority that you will have to focus on first, and then other things must have to wait, even if that is important too. And even if they do want to do this, there might be priorities from the top management that says, we need to get this in place first. If we cannot manufacture our cars, then we have a bigger problem. So I think it's just about priorities, and eventually we will come around. So it's more about, we see they have some processes where we often go into a procurement board, for instance, and that board might need to talk about what new vendors should we find in Europe to have better control over our supply chain. And then that beats other processes. So it's things being delayed. I don't believe that it is something that we will see go away right away, but then it talks to what Morten says. It's about us building a really solid pipeline where we have the coverage to make sure that we can actually grow the way we want.
And then there's a question here on the 23 guidance. So I guess I know your answer, but do you aim be a bit profitable already in the second half of 23?
Yeah, that's we will of course comment on when we come out with the guidance for 2023.
So I guess right. And then do you conduct special activities in order to keep existing customers excited and grow existing customers? Sometimes in where there's uncertainty, where you're already in, where the decision has been taken, it's easier to grow that than to try and get the final signature on a contract. So some elaboration on your thinking going into 23, whether you should put a little bit more focus on that, and that will help you maybe grow a little bit more than would be possible.
We do spend quite a lot of resources on that particular item, and that also, I believe, shows in our low churn. It is really important for us to have happy customers that continues to expand their use of Impero, and we do use sales resources as well as customer success resources and product resources in making sure that this happens. And I'm pretty confident that we will see many more positive developments in this area going forward.
Thank you.